Hello everyone and welcome to today's major markets update for Friday, September 9, 2022. We were looking for the completion of wave 3/C and then a potential 4th and 5th wave, as that would allow for an ideal positive divergence, setting up the daily indicators to tell us a larger counter trend rally was underway. But remember the word potential. Just like we were looking for a potential 4-5 to the upside, which didn't happen, we are looking now for a potential 4-5 to the downside, which may not happen. Some indicators some indexes start to suggest that might not happen. If we're only going to get ABCs to the upside and to the downside, it does open a big can of worms, and it could become a ending diagonal 5th wave. So let's go over what some other people are seeing. So you realize that if I present you with 3 wave counts, it's not because I'm just waving my hands in the air. It is because what other good Elliott wavers are seeing as well. Again, there are no market gurus. There is nobody who knows it all the time. It's impossible. So we have to go over the options. By presenting us with a ABC higher, it opened up the proverbial can of worms. So we just have to move along. And this market is simply not a market anymore where you can just sit on your hands and let it all happen. The market environment has changed tremendously since the all-time high on January 3rd. And if the market environment changes, you have to change along with it. That is the difference between retail and professionals. Professionals change along. Retails will just continue with their stupid opinions. And I call them stupid because they're also called as dumb money. Anyway, here are Jesse Livermore's 21 trading rules. There are so many because trading is one of the most difficult professions out there. Why do you think Wall Street hires legions of PhDs and rocket scientists to figure out the markets? If you think you can do it all by yourself and be better, that's great, but please remember this is extremely difficult, so you need to have a very good plan of attack. I cannot provide you with all the answers. Nobody can. You can go to BlackRock, you can go to Merrill Lynch, whoever. Nobody has all the answers. That's just the way it is, so get used to it, but stick to the rules, stick to your plan the trade, trade the plan. That's all you can do. You cannot control the markets, you cannot control the future, neither the past. All has happened. So all we do is control our trades. That's all there is to it. And then if you have a 70% reliability with a 95% accuracy when reliable, then you have definitely beaten the house, because if you go to Las Vegas, you have a 49% reliability and much less accuracy. So please keep that in mind. Most people prefer to go to Las Vegas and trade the stock markets. So, good luck. Anyway, there are many ways to go about for you to profit of my insights for you. Please use them to the best of your knowledge and extent if possible. And always remember, no silent yeses. If you remain silent, I cannot help you. And I know many people have problems. I get about an email every week. People are down tens of thousands of dollars. And then I need to help them. And in the end, of course, I'm the idiot and the clown, according to others. But that's fine. We're moving along and help other people when they get stuck in a difficult position. And that's really all I get every single week. And it is quite sad. And that's retail for you. And we need to be able to stick above it. So stand above it. So before we go over the charts, let's just have a look again at what other people are seeing, well-respected Elliott wavers that have made a mark in this profession. This is from ElliottWaveTrader.net, Avi Gilbert, and we have 2 counts he is now tracking. Either we have this 1, 2, 3, 4, 5 of what would be an expanding leading diagonal first wave. It is still possible. Expanding leading diagonals are possible. I don't like it, but what I like or don't like is immaterial. The alternative is that we are still in this wave 4, as he has here. We're going to now bounce, I think, to about what is projected about 4,200, and then we get a C wave lower. So we have this green count, which means we're going to ABC higher. Why? Because we did ABCs to the upside on the first wave, ABC lower to the downside, ABC higher on the upside for a 3, a 3, and a 3. Some indexes suggest this decline we had is only 3 waves, like the semiconductors and the small caps. So please keep that in mind. There's some things that just don't match really nicely for an impulse to the downside. So then we have the red count. So we already have 2 wave counts by one of the largest Elliott Wave providers out there. Okay, maybe expect to compare to whatever the company by practice. Regardless, this is by Xena, also highly respectable work. She was looking for this potential 5 waves lower versus an ABC higher. Okay, so there we have now also an ABC higher versus, of course, this. So we have already a different wave count. Here is some work by a guy, I hope I pronounced his name correctly, Mauro Bianchi. I have some issues, I must say, with his attitude, because I know he deletes people that criticize some of his work. That's fine, do what you do, but this is, for example, a bearish wave count. Okay, so then we had a impulse lower as a leading diagonal lower, ABC higher, and now working on 1, 2, 3, 4, 5. So you can see we have option 1, we have ABC higher is option 2. We also have an ABC higher, but then as a leading diagonal first wave and not as a bounce. Or we simply do a shorter term bounce and then lower. So we have essentially 2, 3, 4 options on the table. Okay, that's unfortunately due to the nature of the market since June. Actually, since the all-time high, because it's so freaking overlapping. I've said that many times. Due to the overlap, there's many interpretations possible. So here was the expanding leading diagonal A wave options. It's going to point all the way down to about 3,500, 3,200. Okay, so we have the 1, the 2, the 3, and the 4. We bottomed right here in the ideal wave 3 target zone. We've not come close to the ideal wave 5 target zone. Now wave 5 does not have to reach the ideal target zone. All it needs to do is a marginal lower low, but it's quite odd. Now the index is starting to move well above the ideal wave 4 target zone, starting to move too high. I show you some others as well. So this starts to suggest we might not see this impulse low. It doesn't have to be, but it increases the odds. Then the other one is this simple ABC. I've had this on the charts, and that is what Xenia is looking for as well, between 4,300 and 4,575. Okay, so there we go, between 4,300 to 45, 45, potentially even 4,700. That would be a very bigger bounce, ABC. As I said on Wednesday, we've bottomed right here in the ideal red C target zone. We've bottomed right here in the ideal black B wave target zone. So nothing out of the ordinary. If we move above 41.17, then this is my preferred path. With, of course, the possibility of this leading diagonal first wave. The market really has to prove itself that this is the case, because leading expanding diagonals are extremely rare. Okay, they are certainly possible, but I don't like it. They're lower odds, but we'll keep it on the table. So the bulls now need to reclaim 41.17, and the bears want to push this right below this week's low. If we go below this week's low, then indeed we have an impulse lower. So here's the ABC wave count as well. Now again, I don't like this option too much, because wave 3 and 4 in this wave count. Wave 3 was last Thursday's low. Wave 4 was the high before the horrible Powell speech on that Friday. And then wave 5. Wave 4 was too simple, in my humble opinion. Yes, we did reach the target zone, but wave 5 completely failed. Again, wave 5 doesn't have to, but this is quite a failure. And there is no 5 waves lower on the small caps. Get there in a minute. So please keep this in mind, that this starts to become a little too suspect in the sense of 5 waves lower. Dow Jones topped right here at the top of this wave 4 target zone. So it is still possible. We don't have to, of course, ideally bottom and top in those target zones. But if we start moving above or below target zones, oftentimes it tells us something else is going on. So we have to figure out this a little bit longer, shorter term, to see exactly what is transpiring. Now here's the semiconductors. So the semiconductors can still be in this ideal wave 4 target zone. Has reached it picture perfectly. So nothing out of the ordinary on the semiconductors. But note, on Tuesday, we did not make a lower low, so I cannot count this as a wave 5, this gray wave 5. So that would mean that the potential Friday high for the Powell Friday as a 4, and then, of course, this Tuesday's low as a 5 is off the table because this wave 5 needs to move lower. It's quite odd to see a filled fifth wave. Okay, we can see a filled fifth wave in a fifth of a fifth wave, so to say, of a very long bull run, but this starts to look a little bit odd. If that is the case, then I think this correction is over and wave 2B is complete. So this starts to look all a little bit suspect. We're still in the target zone. We've reached it. We're looking higher. We've reached the target zone, so everything's nice and dandy. That's great, but I see no reversal at all. That means, of course, we have to drop below the target zones. NASDAQ the same. Look, the ideal wave 4 target zone was here. As you can see, we bottomed right here in the ideal wave C/3 target zone. So far, we've still only done 3 waves lower, not 5. If you remember from yesterday's update, I wrote a direct rally above the blue 50-day simple moving average at 12,560. That is no fifth wave lower, will start to suggest the potential impulse lower is not going to happen, with confirmation above the impulse invalidated level. For now, like the Dow Jones, the rally of the Tuesday low still looks corrective. Okay, we still back then had 3 waves on Thursday, but 3 can always become 5. And we have now moved directly above the 50-day simple moving average, which is 12,579, and we closed at 12,588. So we have closed above it. So this starts to become suspect in the sense that we might not get a fifth wave. So technically it's still okay because this wave 1 and this potential wave 4 have not overlapped. We can of course get a wave 4 which is higher than what it should be. This is what it should be. But for now this starts to suggest this is not a fourth wave, but I need more price data to confirm. Bottom line is of course this week's low. And of course the cutoff is 12,900, which is this A1 low. If we move above it, then we know we have this potential ABC, and I'm going to look higher. If that is then going to turn into what Ivy Gilbert sees as a first wave, fine with me as well. The market will have to prove itself. Either way, we're then looking higher. Okay, we're then looking severely higher. So nothing out of the ordinary there just yet. But we need to move above 12,900 and not fall below this week's low. So again, the market is giving the bears some warning signs that this wave 5 might not happen. I don't see this as a 3 here on Thursday and a 4. We failed to reach the third wave target zone. So any way you slice and dice it, it seems wrong to count this as 5 waves lower. The IWM could be the proverbial canary in the coal mine. There are no 5 waves lower to this week's low on Tuesday. Okay, why not? Because we have simply gone straight down since the Powell Friday. There is only a small subdivision 1, 2, 3, 4, 5 of this C/3. I already said this is the ideal third wave target, 177.05. How low did we get? I think we got to as low as 177.50. Okay, maybe I've changed the numbers. This is as accurate can be, off by 45 freaking cents. So, pardon my French, but that's really what we're dealing with. And now, sorry, I have to update the chart. We're back above the 50-day moving average. And as you can see, we have completely moved above this wave 4 target zone. So it's starting to be too high, okay, for this potential wave 4. That's why we track a A, a B, and a C, just as we did here to the upside, A, B, 3/C, which was C. So this starts to suggest this was a B wave, and now we're going to get into a C wave above 190. And again, we're only $2.60 away from it. It's not much. Then I am going to look for this CSA relationship. And then this potential wave 4 didn't happen. This is the objective way of tracking things. Okay, starts to look good, and we just bounce straight off extreme oversold levels. So be it. That's why we track it. And the fact that we moved and closed above this ideal wave 4 target zone is suspect for the markets. And that's really what I wanted to point out. So the IWM starts to suggest we might start to look for this ABC higher, which could turn into, according to Gilbert, a wave one of a large, I would say, ending diagonal fifth wave. Ending diagonals are most of the time comprised of a 3, 3, 3, 3, 3, ABC, 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 ABC move. Okay, that is kind of the whole market's quite an exhausting move, and the market is unable to turn things into an impulse. So, but that for now is my alternative. The ending diagonal fifth wave would point towards 5,500 on the S&P 500. Okay, but for now, let's simply assume we're going to simply ABC our way higher for this CSA. Bonus chart, Tesla. On Wednesday, I pointed out this wave 4 has most likely bottomed. It would be a pretty good long entry, and so far so good. It is up since Wednesday 6-7%, and my trading alert service, the secret service, already went long Tesla, I believe, on Wednesday or Thursday, and is now already starting to sell into strength. That is the beauty of the secret service. You will get trade alerts. You don't have to think about it. Just execute the trades. And so far it's working, and it does sell into strength. So once things go sour and south, we have very little exposure and fewer chips on the table. That is, I think, good professional trading. Retail and amateurs will often have too large positions, which causes you to sleep bad at night if things don't go your way. So we want to sell into strength. So when this wave 5 of 1 tops, we have very little exposure on the way down, and of course start again re-entering when the wave 3 starts. So far it hasn't confirmed wave 5 just yet, but this looks good. This is already a nice looking trade. So that one is of course in favor of a continued upside move for the stock markets as well. But Tesla is not the stock market. The stock market is made up of thousands of individual stocks. But this one is, of course, an important component. Oh, let's see, where is the summary slide? Here's the summary slide. On Wednesday, I was looking for this bottom of wave 3/C, and indeed it had bottomed. Several indexes now start to suggest it was a C wave low, not a third wave low. Here in bold, I have updates to what I wrote on Wednesday. Of course, make sure it's so grammatically correct. On Wednesday, I said all indexes align well for the preferred fourth wave bounce. Well, we got sometimes a little bit more than we asked for, but looking higher was indeed shorter term the preferred path. And then I was hopeful, well, not hopeful, but I was looking for this fifth wave lower to get that positive divergence set up. We might not get it. Looking higher was correct, but the current rally is starting to move too high for this ideal wave 4 on several indexes, especially the IWM, Semiconductors still there, and the NASDAQ 100. Those two are starting to tell us that something else is going on. So we had two main alternatives. Okay? 5 waves lower, or we're going to go back through the low was made on that week when Powell's quote was all on Friday. And then we have a larger ABC higher in the making, with the August high as a wave A, then this week's low as wave B, and then wave C underway. Okay, again, above the fourth wave target zones, I said on Wednesday, on daily closes, increases the odds of this item 2.2. Okay, item 1 was preferred, but we still had this potential. That's why I kept labeling it as 3C. So as under 1.1, it looks like several indexes are doing an ABC lower and not a 305. Technically, it's still okay, but this needs to reverse really hard next week to tell us this is not going to move higher. Bonus chart Tesla, I said on Wednesdays, preferably in wave 5 of 1, as long as Tuesday's low holds, upside target 330 to 350. So far, so good. I hope you took the trade. It's there for you to take or you don't. I don't tell you what to do. Again, my secret service already went long Tesla. You can easily add it to your trading. It is a simple no-brainer trade. And please use it for the appropriate time frames. I had people telling me that they got too many emails. They wanted to trade longer term. But I have intermediate term, long term, and short term trading sequence. But they didn't use it. So I don't know what to tell you. If that's what you're looking for, but don't use it, then it's all bets are off. So that's retail for you right there. So we move on, and then of course we're not going to use it anymore. Great, weird stuff going on. People need to get their heads straight. Sorry for all the rant, but it's just really amazing to see that happen. Okay, you want to have intermediate to long-term exposure. It's right there for you, and then you trade short-term. So then it's not going to go well for you because you're trading the wrong time frame. And if the right time frame is presented to you, you don't use it. Well, that's on you. Don't know what to tell you. Anyway, back to the indexes. Some indexes, the IWM and the NASDAQ, are starting to move too high. Technically still okay, but for this ideal wave 4. So the bears are being placed on watch that this wave 5 lower might not happen. I can squeeze 5 waves lower into some of these indexes, but then we simply have a 5th wave that did not reach its full potential to the downside at all. Some actually had then a failed 5th wave. I don't like it, starts to look suspect. And we might simply ABC our way much higher. So please be cautious out there. Market is definitely not in an easy environment. It has not been easy for the last 9 months, and I don't think it will be easy going forward either. I wish we had the impulse higher, but that didn't happen. So now we have to content ourselves with an ABC higher and possibly also an ABC lower. I don't make the markets. If I did, it was always impulsing higher and 3 waves lower, and that'd be it. Super easy. But the market is making it very difficult. As you can see from all the other great Elliott waves out there, you can distill it to 4 different options. Pick the one that's right. I can't tell you with any certainty which of those 4 is the correct one. The market will tell us. So very simple. If we break below this week's lows from current levels, we can still have an impulse lower. If we're going to move above that low was made before the Powell screwed us all on Friday, those are the cutoff levels on the charts, and then we know we have a loud and clear ABC to the downside after an ABC to the upside. So then we should expect another ABC up to the upside. All right, that's all there is to it. Thank you so much for listening. Take care, trade safe, be smart, and have a great weekend.